You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. It is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating Options Insider Radio Network. No matter how you enjoy it on demand, if you're an on-demand listener, make sure you keep rating and reviewing on your platform of choice. Really does help all the new folks continue to discover all the content out there, whether you're out there in the secret handshake club or somewhere in the middle, maybe on the plus or just somewhere else there hanging out. Make sure you keep engaging with the content. We love to hear from you folks at the end of the day. Your questions, your comments, your insights are what help drive the network and fuel it to go forward. So keep sending in those questions and comments. We do love to hear from all of you folks out there. Of course, everybody in the secret handshake club gets bumped to the front of the list there. And of course, let's see who we're hearing from on the old program today. First, let's go out to the land of Texas and volatility, where we are joined once again by the greasiest of meatballs, Mr. Mark SEBASTIAN from OptionPit.com. Mr. Meatball, welcome back to the program, A. And B, how goes the Rock Lobster? I know he was a little under the weather yesterday, sir.
Yeah, he's feeling better, so no worries about him. Yeah, we've got ourselves a day, don't we? For how slow it is, there is a ton going on in volatility to talk about, and I can't wait.
Yeah, we actually have some stuff to talk about, which is always fun. And joining us to help us break it all down, holding down the MIAX hot seat today, Mr. Matt McFarland, the derivatives, products, and biz dev specialist over there for futures at MIAX. Easy for me to say. Mr. Matt, welcome back to the program, sir.
Hey, Mark, happy to be here and looking forward to talking about volatility with you this afternoon.
All right, then let's get to it. It is time for the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
right, everybody, welcome to the Vol Review, the portion of the show where we break down what's trading and trending and moving out there in the world of volatility. And, it's kind of been a rinse and repeat throughout most of the week this week. We've seen usually a couple of things. First off, most of the major indices moving in one direction, and then one of them, typically the NASDAQ, but yesterday it was the Dow, deciding to go in the other direction. B, none of them really moving a whole heck of a lot in either direction, really slightly up, slightly down, but not a heck of a lot of drive really in one direction or the other. And B, all this kind of middling about is really just raise the red flag to everybody, or just raise the starter gun here for everyone out there who wanted to just crush vol. They were a little bit spooked at the beginning of last week when we saw vol starting to tick up a little bit. People thought maybe the worm was turning. I remember Jim on our last show said, something's got to give at the end of the day. The futures are here. The cash is here. Something has to happen. And it seems like what happened was everything decided to come in. Just everything's coming in this week because we have all of our major vol products off quite a bit from where we were this time last week. So everyone who had a 15 handle in our crystal ball and indeed in our VIX poll this week, looking pretty good out there. Coming into showtime, we have spikes at about 15 3/4, down about a point from where it was this time last show. VIX cash 15 1/4, so threatening a 14 handle, listeners, coming into the start of the show. I mean, that's pretty aggressive, off nearly 1.5 handles from this time last week. I think Jim was the only one who might have been in our crystal ball who had a 15 handle. So, and he wasn't this aggressive, I don't think. VVIX at about a 118. That's actually up 6 points because vol is moving. It is going away, but it is still moving. So a lot to unpack there. Maybe we'll start in your neck of the woods, Mr. Matt, there. We'll get to all the fun future stuff and everything in a second. But before we get there, what's been lighting up your tape and what's catching your eye in the world of volatility these days, sir?
A lot. Despite, relatively low volatility and underlying indexes, which are just making new highs by the day. The development of our Spikes futures has been absolutely fantastic. We're having a great month. The average daily volume for Spikes futures in August is over 3,000. We had a record day Tuesday of this week where we traded nearly 5,000 contracts. So, this is a futures contract that only a few months ago was trading zero. So we're making tremendous strides. The liquidity is absolutely fantastic. The liquidity providers that are in our market are some of the most sophisticated liquidity providers that are in the market. Clients are executing trades smoothly, quickly, efficiently. So very, very pleased with the way things are going. The bid-ask spreads are just, a tick wide, 50 to 100 contracts per side. So very excited about the way things are going and, the implications that a liquid underlying futures market has for our Spikes options market as well. Expect to see improvements in market quality there come next month. And when you have improvements in Spikes options, then we could produce things like V spikes or volatility of volatility. So a lot of exciting things coming out of MIAX these days.
Indeed. Sounds like it. We'll get to more of that in the future segment in a little bit. But first, let's go back to the greasiest of meatballs, Mr. Meatball, sir. As you mentioned, a lot to unpack in the world of volatility this week, sir. What is lighting up your tape this week, sir?
Well, to start, we don't call it V spikes here on Volatility Views. It is called the Viking.
Trademark pending, copyright pending.
Trademark pending, copyright Mark Sebastian. And I know we're going to talk about this, but the futures curve is still wide enough to run a Mack truck through. Everything is off, but still wide. And that is creating some really unique trades that I don't know that I've ever seen in my life in VIX and Spikes that I cannot wait to talk about here momentarily. But we are just seeing some really unique trades form going into August expiration next Wednesday.
All right, let's get into all of it then. Matt kind of dove into it already there on the land of the futures. Spikes futures pretty much having a pretty strong week. I think you can put it mildly. Our buddy Simon let us know that, I think it was Tuesday. Yes, Tuesday. You had a new record, nearly 5,000 contracts going up over there on MJX 4,966. So it seems like, Matt, all the voodoo you guys are doing behind the scenes over there on the futures front seems to be paying dividends, sir.
Yeah, and I think it's kind of like the old adage of volume begets volume. It's as the volume numbers have been trending higher, that is capturing the attention of other market participants, and they are starting to join our market. So more and more market participants are coming in each day. So that's resulting in higher volume numbers. It's kind of like a party where, a few people join a party, and then other people will see that there's a party going on and they want to get involved in the party. And that's essentially what's going on in Spikes Futures. More and more folks are getting involved every day, and that's great for the market because the liquidity is strong, and clients can get in and out of the market quite easily. So excited about the developments in Spikes Futures for sure.
That's the kind of party I can get behind, because that means, of course, more volume for the underlying means tighter markets for everything, including the options, which we'll get to some of that paying dividends this week as well. But first, let's go back out to the aforementioned vol surface, the VIX futures curve. As Mr. Meatball mentioned, it is looking a wee bit interesting these days. And coming into showtime, we had the AUG future down about 2.5 points from where it was this time last week. So coming in quite a bit. And the SEP future off about 2 points. So we were kind of wondering last week, what was going to happen. And a lot of coming down there, at least on the front portion of the curve. Mr. Meatball, you kind of mentioned that this is setting up some unique opportunities that you haven't really seen before. What is lighting up your tape in the realm of the future, sir?
Yeah, I mean, we have 2.5 days of trading left, and the future is still trading at a huge premium to the cash index. The future is about 16.5 in August, and the index is 15.25. That's $1.25 with 3 days to go. Yeah, we've got a little weekend effect, but still that spread is incredibly wide. You'd expect it to be about 50 to 75 cents by now, and it's still $1.25. So there is a good 50 to 75 cents of extra juice in the VIX future. September, despite coming off, is trading 4 points over the cash index. It should be about 2 to 2.5. So you have a huge amount of premium in that spread there. The curve itself has somewhat normalized. It's just really expensive relative to the index. I mean, the January future is almost 8 points ahead of the cash index, and the longest term future, which goes out to April, is trading nearly 9 points above the cash index. So the spread, the curve itself is pretty normal, but the spread with which it's taking over the cash index is monumentally wide. And with what's interesting about August is that with so little time left in August, which sucks out a lot of the time value, relatively low volatility, not super low, but relatively low volatility, and this wide spread, I'm seeing trades develop in the options that you just don't see. And by that, I mean, I can buy straddles underwater. I should not be able to buy straddles underwater. And what do I mean by that? All right. And we could talk about this a little more in the options segment, but the August 17 calls are about 50 cents. The August 17 puts are 95 cents. That adds up to $1.45. Well, 17 minus $1.45, last I checked, is $15.55. All right, so the straddle starts making a profit at expiration beyond $15.55. The index is $15.30. The 18s are even worse. The 18 straddle is about $2. It is trading a full 70 cents above the cash index. I don't know that I've ever seen straddles trading below parity before that are near the money. I don't know that I've ever seen that. And that is the creation of this small amount of time to expiration and this wide curve.
Yeah, I'm trying to think off the top of my head of any other time that would be analogous to this. And you're right. I am hard pressed to think of one where we've seen anything like this. Strange times afoot. But again, kind of a bit of a broken record. I've been saying that since the beginning of the pandemic. Something unprecedented is happening pretty much every week. Let's see if we can find something unprecedented out there in the land of the options, as Mark was alluding to. Let's start in the land of spikes. And Matt, I mentioned it sounds like your futures incentives do seem to be paying dividends because we saw some more paper going up. In particular, looks like Wednesday, someone coming in, diving into the spike/VIX erosion train, picking up about 1,000 of the SEP 17 puts, lifting the offer there for 60 cents back when the spike was a lofty 2020. So a lot higher on Wednesday. It's come in a lot just in the last few sessions. So that brings, the size OI positions out there to, we've got, so let's just do a top 5 here. Number 10, we've got the AUG 16 puts. Number 4, we got the SEP 17 puts. Number 3, the AUG 30s, 30 calls. Number 2, the AUG 17 puts. And then number 1 out there are the AUG 20 puts. So, Mr. Matt, it sounds like we've been talking for a while. Are these tighter futures markets going to drive more options paper? Seems like we're seeing that this week, Matt.
Yeah, for sure that SEP 19 or SEP 17 puts were the largest trade. And it was actually a customer was a seller of those puts, which I've found that kind of interesting. That
really they sold the offer on the puts. Wow, I need to trade more spikes options. Clear.
But I think you'll continue to see tighter markets. One of the things we're working on. We've been really focusing on the futures so that we could get better options markets. Obviously, the options markets are only as liquid as, or can be only as liquid as the futures markets allow. And so we've got an incentive program that's going to go into place in September for the options market. So I think you'll start to see tighter options markets come September. But, carrying on the theme that Mark was talking about in terms of steepness in the term structure that you're not only seeing in August, but I've been looking at the spread between SEP and AUK. And at the beginning of the month, on the spikes futures, the spread between the SEP future and the AUK future was around 70 cents today, or at least at the close yesterday, it was around $1.30. So you're seeing more steepness of the curve in that particular segment of the curve, which typically indicates, market complacency or an expectation of lower volatility in the near term. So this 17 put where the client was the seller was kind of an interesting trade in the backdrop of that context.
And, Matt, we were just saying how somewhat unprecedented what we're seeing out there in the futures is right now. You spent the lion's share of your career day in, day out around volatility futures. Can you recall off the top of your head another scenario, another time frame that shaped up like this, or is this to you unprecedented as well?
Yeah, I mean, I agree with Mark 100%. As I was preparing for the show and I was looking at historical term structures going back, the amount of premium of the expiring contract relative to the index is exceptionally strong right now and highly unusual. So Mark did a great job of highlighting that unusual feature that we're seeing in the market today.
Yeah, Matt, you want to know something interesting? I was talking to a reporter on Bloomberg. Do you know what the spread? So in 2020, on February 19th, VIX and Spikes futures expired. You know what the spread was between those indexes and their March future, which had an entire month to go in February of 2020? This is going to shock you.
No, yeah, that's right before COVID.
Right before the COVID blow up, which really started on that Friday. So you know what the spread was? 75 cents. The VIX was trading 1546, almost exactly where it is now. And the March future which had a month to go, was 75 cents above the cash. Here we are. I don't know that we're going to get a COVID blow up on Monday, and they're trading it at $1.30. It's just unbelievable with 2 days to go. September, 4 points.
Yeah, they are still kind of pricing in that other shoe maybe dropping, but you're right. The clock is ticking. And that shoe, if it's going to drop, it's got to drop pretty soon, pretty much over the weekend or on Monday or Tuesday. And so far, we've been talking about this for a couple of weeks now. It seems like they were pricing something else in the ether, and yet it has not materialized. In fact, all that's materialized is just aggressive crushing of all things volatility. Let's see if that's materialized into some options paper on the VIX front. We already know some numbers going up out there in spikes. VIX also doing some numbers this week. The ADV finally ticking up again after kind of languishing and trending downward for a while. The ADV out there right now, 442,000 contracts, up about 16,000 from this time last week. Looks like they're going to break it again today. As of a few minutes ago, they were just a tick under 400K, about 399,000 contracts. On the tape, before we get into what's lighting it up this week, let's break down the top 10 sizable positions out there in VIX options land. Cost you 145,000 contracts to break into the top 10. That gets you to the SEP 18 puts. Number 9, 149,000 of the SEP 40 calls. Number 8, $1.49 as well of the SEP 16 puts. By the way, it is still, looks like, still 60-40 puts to calls in the top 10. So it was 50-50 for a while there. Last couple of weeks, it's been 60-40, and that doesn't seem like it's changing this week. Number 7, $1.52 of the SEP 35s for the second of 4 calls in our top 10. Number 6, 162,000 of the AUG 17 puts. Number 5, 171,000 of the September 15 puts. Number 4, $1.77 of the AUG 16 puts. Number 3, 179,000 of the September 17 puts. And then the top 2 are in the call front, which is kind of interesting. So calls dominating the top 10 here. Number 2, 194,000 of the NOV 60s. That strike's been open for a while. Been kind of interesting to watch for a while. And then number 1 with a, I guess you can call it a 22 out there. Not really a large caliber bullet. 218,000 of the SEP 25 calls. So calls still dominating the top 10 if they aren't making up the majority of the positions out there. Let's break down some of the paper out here. Then we'll get the Meatball's thoughts on and anything that really resonated with him. It seemed like a few times this week we were going to be hot and heavy. Remember on the option block, I think it was even yesterday, we were talking about, man, it seemed like a lot of paper was on the VIX tape very early. Going to blow the doors off the ADV, and then it kind of just, that was it for the day. So a lot of that this week. Today, though, looking pretty robust, kind of like it did yesterday. We'll see if that will carry through, if it'll kind of just going to settle out around here again. Right now, 395,000 contracts, 398,000 actually on the tape right now. The most active contract is the AUG 16 put going out on obviously next week on the 18th. 52,000 of those, followed by the AUG 15 puts also next week, 44,000 of those, and almost 31,000 of the AUG 17 puts. Number 4, 20,000 of the November 32 halves. And number 5, SEP 25s with about 18,000 of those. Yesterday, a little bit more paper on the tape, 431,000. I think that's about almost exactly as much as was when we were talking about on the odd block or the option block. I think it was about almost 400K even by then. So not a lot happening in the second half of the day yesterday in VIX. 79,000 of the AUG 16 puts was the most active contract yesterday. So that probably accounts for what was going up so early in the morning, followed by 68,000 of the AUG 17 puts. Number 3, we drop off quite a bit, pretty much cut in half almost exactly to 34,000 of the AUG 20 puts. Number 4, 31,000 of the AUG 19 calls. Finally got a call in there. And number 5, 22,000 of the AUG 18 puts. Wednesday, the busiest day of the week, 626,000 contracts on the tape. The most active contract that day was actually a call, 48, almost 49,000 of the AUG 20s. Unless I say otherwise, listeners, these are all expiring next week. These aren't in the weeklies. Number 2, we've got whole strip of NOV going up here, 35,000 of the NOV 17 puts, 35,000 of the NOV 16 puts, and also 35,000 of the NOV 18 puts. So bit of a tree strip, call it what you will. It's not obviously not a fly or anything. There's no ratio to it. So yeah, just a strip of 35,000 each of the NOV 17, 18, and 16 puts there. And then number 5 was 28,000 of the SEP 15 puts. Tuesday, one of the lighter days of the week. Pretty much it looks like actually the lightest day because today has already surpassed it. 375,000 contracts on the tape. the most active contract, 25,000 of the SEP 15 puts, followed by 25,000 of the first October this week. 14 puts, number 3, 15,000 of the SEP 65 calls. Interesting. Followed by 15,000 as well of the AUG 18 puts. And rounding out the top 5 on Tuesday, this is one of the ones we noticed. 15,000 of the NOV 95s. I don't know what it is about November and, shall we say, optimistic upside, but it is rife with it these days. Monday, 400,000 contracts exactly on the tape. Number 1 most active contract there, 34,000 of the October 14 puts, followed by number 2, 26,000 of the SEP 40s and 19,000 of the SEP 30. So maybe a bit of a ratio vertical there. Number 4 here, we've got SEP 17 puts, 17,000 of those, and the AUG 18 puts, rounding out the top 5 on Monday with about 14,000. A lot of interesting stuff going up this week, Mr. Meatball. What, if anything, caught your eye and resonated on your tape this week, sir?
Yeah, I would say that the August downside is really eyebrow raising. Yesterday and today, the AUG 15s, 16s, and 17s, both days have accounted for about a third of the volume. And the volume going up, notably on the 15s, which are a nickel, is absolutely huge. We're also seeing, like you said, 50,000 of the 16s going up that expire on Wednesday. So there is big paper swooping up and buying these, gambling on VIX kind of staying where it is or potentially even going lower. Realized vol in SPX is falling off a cliff, so it would make sense to see VIX and spikes fall back. We're seeing paper put on that trade using options for some size. That's really been the big piece that has popped at me over the last few days and weeks. Growing open interest in the September 15s, big buyers of the October 14s going up. If it costs a nickel, a dime, or 15 cents, they're being scooped up in droves.
I used to always say that it was February that was the realm of the crazy / optimistic upside call trades. We would always see those going up in VIX in February for whatever reason. I may have to rethink that. Maybe now it's November. What do you think, Mark? We got the 60s, we got the 95s. It seems like when people are coming out for their crazy upside, it's November these days, Mark.
Well, we've had some November surprises. We've had some stuff there. That would put us, if there's going to be another COVID shock, that would probably put us right in the middle of it. So not entirely surprised, but I will say that I think it's 95 seems a bridge too far.
I could see an argument for maybe that last November. I'm not sure about 95s this November, but we shall see as we keep on rolling out here into the land of the products you folks love to fade. Let's kick it off with VXX. We said even last week that pretty much the entirety of July was a lost month for these kind of eroding products. They eroded a bit, then they would pop, then they eroded a bit, and they would pop again. So it was kind of a whole bunch of nothing on the downside front for these products in July. Well, they're making up for lost time here in August because they kicked it into high gear this week. Let's start with VXX. Coming into showtime was at a 25 3/4. That puts it down pretty much exactly 3 points from where it was this time last. It looks like it's ticked up a little bit up to 26 again. So maybe getting some of that back, but still better part of 3 handles since our last show. That's a lot of juice to come out in just a week, listeners. Let's break down a top 10 out here, and then we'll see what's lighting it up. Number 10 out here, it cost you $18,000 to break into the top 10 in VXX. Looks like there's still 1, 2, 3, 4. Looks like half of the top 10 is still the VXX1, aka the pre-split adjusted strikes out there. That gets you number 10, 18,000 of the Jan 12 puts. Again, that's VXX1. Number 9, 18,000 of the SEP 40s. Number 8, back to VXX1, 18,000 as well of the SEP 14 puts. Number 7, 21K of the August 48 calls. And those are going out today. So I hate to break it to you, sir or madam, but probably not going to hit 48 today. And number 6, 21,000 of the AUG 27 puts. Number 5, 21,000 as well of the SEP 14s back to the VXX1. Number 2, 22K of the August 38 calls. So 38, 48, maybe a bit of a vertical there either way. Neither of those strikes coming to fruition today. Those are both going the way of the dodo today. Number 3, 23,000 of the SEP 9 puts. Again, back to VXX1. Number 2, our final good old regular VXX position here, 25,000 of the AUG 25 puts. And number 1 is still the old legacy VXX1 SEP 10 calls with about 32,000 of those bad boys. Today, decent paper, about 113,000 contracts on the tape. The ADV pretty much unched us down about 1,000 contracts from last show. So down to about 221,000 from this time last week. Mr. Meatball, anything lighting up the tape or the tape of your crazies out there in VXX this week, sir?
Yeah, it's been a rough week for VXX. One thing, this is why you need to be monitoring the VIX curve. A lot of times as we head into expiration, this curve is relatively, is starting to get close to the cash. Since it's not, we have the potential for an absolute bloodbath in these ETPs. Both VXX and UVXY could face a lot more pressure. And if September stays bid, it could be continued downside. These guys are going to have a very tough time. I think we had one day this week where the VIX was maybe marginally up and they still lost money. That is the way that that VIX term structure is set up right now. You could get a nice move in VIX and still not make money on these products going long. I did have an interaction with somebody on Twitter where they're like, yeah, maybe I'll buy some VXX since everyone says it's going down. I said, it's a bad idea. I came back a couple days later and it goes, I should have listened. The thing to always remember with these products is you don't go long until they start to go up. And that approach continues to pay off this week with VXX.
Yeah, you could do a whole show on why you shouldn't be buying this thing in most scenarios, but this was a rough week to be loading up on VXX if that was your inclination. Let's look at what's lighting it up out there today, then we'll move on to another product you folks like to fade. Not a ton of paper on the tape today. Let's see the most active contract in VXX today. The AUG 38s. These are going out next week on the 20th. So these are your regular AUG. 5,600 of those, followed by about 4,000 of the AUG 26s. These are expiring today. And then 3,200 of the AUG 25 half puts. These are going out today as well. 3,000 of the AUG 35 calls expiring next week. And 2,700 of the AUG 27 puts going out today. UVXY seems like it's in a race to go away as well because that one beating VXX this week yet again. VXX off about 3 points. UVXY says, hold my beer. I can do that. And then some, off 3.5 handles from where it was this time last week. Coming into Showtime was at about a 22.5. So intriguing stuff afoot out there as well. Let's see how much paper is on the tape. It was a decent day, about 65,000 contracts so far. That's pretty much almost exactly half of its ADV, which is about 134,000. Like VXX, that's pretty much unched from last week, down about 1,000 contracts from last week. Let's break down the top 10 out here in UVXY as well. Remember, these are a little bit smaller positions. It's not VIX after all. Number 10, 5,400 of the Jan 4 puts. Same deal with UVXY. We have 1, 2, 3, 4, 5, 6, 7. 7 of the top 10 positions are pre-split adjusted UVXY1. So just bear that in mind as we break these down. Number 10, 5,400 of the Jan 4 puts. Number 9, we have 5,600 of the SEP 30s. No, these are all VXX1. Interesting. Number 8, 5,600 as well of the SEP 4 puts. Number 7, 6,000 of the SEP 1 puts, 1.0 puts. Number 6, 6,200 of the Jan 10 calls. Number 5, our first of 3 actual UVXY contracts in there. We got 6,500 of the AUG 25 calls. Then back to UVXY1. Number 4, 7,000 of the SEP 5s. Number 3, 9,300 of the Jan 1s. Number 2 and 1, finally back to good old regular American UVXY here. 10,000 of the AUG 70s. That's right. This is my favorite strike. It persisted. There were some open last week as well. Those have now gone the way of the dodo. We talked about this. Someone has this strange August 70 call strip on every week. They have a ton of them. And those are still open. Obviously, last week's went the way of the dodo. This week, we have AUG 70s expiring today. 10,372 of those for number 2. And number 1 with the bullet out there in UVXY, 11,794 of the AUG 70s expiring next week. This persistence on the 70 strike in August just flummoxes me. I don't understand what is going on out there. I need to dig into those strikes a little bit more and see exactly what they're putting up. Hope to God they're selling these. I can't imagine they're getting much for them, but they seem to be opening new ones all the time. So yeah, that's just yet again weirdness afoot at the top of the UVXY chain. Mr. Meatball, same question I have for you as always. First off, what's lighting up your tape out there in UVXY? And B, the other question I always have for you, how many of these AUG 70s did you buy this week, sir?
I mean, I just backed up the truck. You can't lose on the August 70s in UVXY.
I mean, there's very few foolproof trades I can ever recommend in the history of this network, 15 years. Buying the AUG 70s, I'm hard-pressed to see how you go wrong with those, sir.
Yeah, no, it's just been an obliteration. We were long puts in several products this week that paid out really nice returns. There's some really, you can do the math on how much this product is losing on a daily basis and come up with some pretty nice trades to fade this thing that are pretty low risk and high reward. Been doing some of that. I was looking at the August 22.5s that expire next Friday. They're about 95 cents. Those look relatively inexpensive. And if you go further out, the September 18 puts for 75 cents are really inexpensive given how much this thing could actually lose over the next 5 weeks of trading. It could be really, really ugly. This thing could be to $15 by September with how wide and crazy this curve is.
Just reverse split to 40. They may almost have to think about doing it again soon at this trajectory here. Insanity. I'm looking here to try to dig up these AUG 70s, what's going on with them. Of course, when I need to do that, listeners, is when my system decides not to play ball with me. So I'll see if I can get those up for you a little bit later in the show as we keep on rolling. Let's go on out to the land of single names and earnings volatility, because there is a lot to unpack there, listeners. Action-packed week here this week. Some names you may have heard of popping off this week. Monday, we had AMC. Tuesday, we had Coinbase. Wednesday, we had Wendy's, Neo, eBay, and Bumble. Thursday had the Diz, that magical company that managed to rally during a year when their parks were closed, when they had no major movies released, when sports were pretty much off the air, so ESPN was struggling. And all they had was Disney Plus, and yet they somehow managed to rally hard over the entirety of that year based almost solely on Disney Plus. It's a pretty magical feat that they pulled off there over the analysts. I'm impressed. And they had a good numbers again this week as well. And Airbnbs, let's break down some of these earnings move results, and earnings season reports for you guys. As always, can get these for yourselves, theoptionsinsider.com. Click on the options news and articles tab, and you are off to the races here, listeners. Let's just see. We had BIDU. These were yesterday before the bell. 165 was where that stock was going into their announcement. They were pricing in 4.7%. They delivered 4%, so a little bit of underperformance there. Palantir, that's one of the few rays of sunshine for those out there looking for the worm starting to turn in earnings volatility. They were, yesterday before the bell as well. 22.35 is where they were going into their announcement. They were pricing in 8.4%. They delivered, get this, listeners, nearly 15%, 14.9%. And they are trading today right around $25. So they're still up almost 270 from that level. So yeah, a good run out there in Palantir. Let's go out to Bumble. They were earlier this week as well. They're the female-centric dating app. Hard to believe it took them that long to come up with that idea. That seems like a no-brainer, but hey, Bumble got there and they turned it into a pretty profitable IPO. Not a lot of track record for them on the earnings front, obviously. So let's see how they performed. They were after the bell on the 11th. They're trading 47.67 going into their announcement. They were pricing in a whopping 9.2%, and they delivered 4.3%, listeners. Let's see. Yeah, they were 4.3%. They are still up, though, from they're at 50 and a quarter. So they're up around, looks like $2.50 from that level there. Okay, and then NEO name that, usually a stalwart for options volume, for options activity, and they were on the 11th after the bell as well. They're right around $44 when they went into their announcement. They were pricing in 7.1%. They delivered 2.5%. They have moved a little bit more since then. They've sold off a bit. That was at 42.88. They're down to 41.21. So they're looking a little bit better, a little bit closer to their straddle. But then again, these reports are taken in pretty much the immediate post-earnings blush out there. So if you hold them till expiration, things change a little bit. eBay, another name that usually can deliver a little bit of action out there. Let's see how they performed. eBay 68.02 is where they were going into their announcement. They were pricing in 5.7%. They delivered at the time 1.2%. Looks like they have since swung. They're upsized today, up 4 points. So something is going well in eBay land today, up trading nearly 73. So now if you factor that in, they're up about almost $5 from where they were on their announcement. So that seems like they actually have outperformed. So again, it's a bit of a frame of reference issue as well. All these reports are run off the immediate kind of vol crush after the announcement. But if you expand that frame of reference a little bit longer to expiration, or at least till the Friday of that week, things change a little bit. And eBay seems to be one of those names that is bucking the trend out there as well. Still, overall, the season looking better than past seasons. Last few seasons, we've been around 60-odd, 70-odd percent, sometimes 50-odd percent. This season so far, winding down at about an 82% right now. So that's actually impressive. We'll see if we can maintain that. I have a feeling the answer is probably no, and they usually revise these. The numbers usually come in. But we shall see. Speaking of seeing, let's look really quickly. I managed to pull up the data on these UVXY AUG 70s here. And it looks like they went up. Let's see, they took some off on the 10th this week. They had more open. They took some off. And then looks like they initiated a lot of this position back on July 30th and August 2nd. It does seem like they were actually selling these, thank God, because if they were buying these, I would have to question what they got. 26 cents for these things, 25 cents. They sold the AUG 70s for in UVXY back on August 2nd. Wow. That's actually a lot more juice than I would have assumed. That, if you're curious, listeners, that's a 208% volatility. So, Mr. Meatball, sounds like you're missing out on the blasting away at the AUG 70s train here, sir. There's some juice to be mined in those hills, sir.
Indeed, there is. There is a ton of juice to be mined. So, it's a real good opportunity to do some overwriting there.
I mocked this guy. I take that back. I tip my cap to you, sir. You found a little nugget, a little gold mine here in UVXY. No wonder why he's going back out to that strike week after week. He's like, you know what? Hey, if they're going to give it to me, I might as well take it. So well done to you, sir. Let's see if we can extend that congratulations to the listeners, because it is time for the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, let's get to it. First off, it's coming down to the final minutes here for our poll. You guys were coming in hot and heavy. This was a fascinating one to watch play out this week. We gave you guys, we always have the opportunity, if you're listening live or listening after the fact, to send in your prognostications for vol views, but we thought we would open it to the wider public this week. So we put out a poll this week, said, hey, if you want to play along with the crystal ball, what's your prognostication for where VIX will close at the end of the week? And we made it even easier for you. We just gave you ranges. Don't have to pick an exact number like we have to do here on the show. Gave you 4 ranges: below 16, 16 to 17.5, 17.5 to 19, or above 19. And again, how this has played out has been fascinating to watch. Maybe Mr. Matt will go out to you first. Again, this has been fascinating to watch. We asked our audience where they thought VIX would close. We know where we are right now, but remember, this poll was live throughout the entirety of the week. So I'm curious for you, sir. Where do you think our audience lined up this week? Was it below 16, 16 to 17 half, 17 half to 19, or above 19, Matt?
I suspect that folks would think it would be below 16. I think that, earnings are largely out of the way. You've got COVID vaccinations probably going to increase because of mandates, employers requiring it, schools requiring it. So maybe COVID's getting under control a bit. Steep term structure, all those things kind of summer months, all those things kind of pointing towards higher highs in the S&P 500. So all those things pointing to lower volatility. So I think I'm going to go with lower than 16.
Interesting. I could see why you might think that. Mr. Meatball, you've had some time to weigh in on this a few times this week, or at least once. Has your thought evolved, or where do you think our audience is lining up, sir?
Well, as I stated on Monday, I thought we were going to end up below 16. I said that on Option Block despite my vol views prediction. And the audience is with me because the audience is smart enough to know they shouldn't disagree with me, except for when it comes to my prediction for volatility.
You might think that folks would be piling in at the end of the week here to load up on below 16 and drive it up. And yet we have not seen that. In fact, we've seen a spike, pun intended, of interest in the 16 to 17 half region, which is now winning with 28.6%. So folks have flocked in today to say it's actually going to close above where it is right now. It's going to close in that 16 to 17 half region. That is actually number one. This has to be one of the most just evenly distributed polls we have ever done, because number one is 16 to 17 half, and number two is everything else. Literally everything else is tied at 23.8% for below 16, for 17 half to 19, and above 19. Everything is pretty much equal. And that's pretty much been the case almost the entirety of the week. People were taking screenshots of this poll and sharing it around because they couldn't believe how evenly distributed it was. But yeah, that's what makes a market, listeners, is, everyone has a different viewpoint on vol. And that was clearly reflected out here. There were a lot of people out here, pretty much half of the audience, who thought we were going to be well north of the 17 half handle right now. So again, this is what makes a market. This is probably why we're talking about, this lingering distance between the cash and the futures. Something is keeping it maybe up. I think we're seeing that in that poll as well. There is still obviously some concern, some belief on some potential upside there in the relatively near future. So even today, people are still flocking into 16 to 17 half. They think something's going to drive VIX and spikes up. We shall see. They could very well be right. Vol could move. Yeah, this is definitely a somewhat aberrant thing. All right, let's go out to the Secret Handshake Club. My boy Luigi is in there. He's got a question for you, Mr. Meatball. He said, would the Meatball consider a call ratio spread in September VIX? The spread would have to be pretty wide to be put on for a net credit. Currently, I have a short 18, long 24 for the August expiry, thinking of rolling to September. He put my original August spread on for a 7-cent credit. So you sold one, bought two, and you made 7 cents on that. Interesting. Let's see. But I'm guessing that's probably a debit. But let's see. So he wants to know, Mr. Meatball, are you on board for the old 1x2 18-24 strikes, but this time in September, sir?
I think if you think that we're going to pop, that could work. Generally, these work better when they're a little further out of the money than the 18-24. If I was going to set one of these up, and I'm not saying I would probably look at because you're right, skew's really steep. That upside is really expensive. It's probably cheaper to do a call spread or something like that. Or like I said, wait until the index actually goes up before you start trying to hedge yourself. But even the 18-24s won't give you a credit here. You've got to do like the 25-35 and maybe you can eke out a credit there. But vol is really high still. VVIX is still really high. And the spread is really wide, so that September contract is not particularly cheap. Maybe you do a little better in October. No, I mean, I don't think ratio spreads work very well. VVIX is just too expensive at 100 and 1 second. Yeah, VVIX is 117. Those ratios don't work very well when VVIX is not in the 90s.
Yeah, I have to concur, Mr. Luigi. And by the way, he says you put it on for a 7-cent debit. That makes more sense. I did not think I'd be very impressed if you got a credit for that. And speaking of looking for credits, that's going to drive you nuts. You're not going to get a credit the way things are out there. I think you have to put it on so wide to get a credit. I mean, that's madness. You don't want a 10-point wide 1x2 right now. Just think of all the things that could go wrong in that 10-point handle. You're going to have all these risks just for a couple of cent credit. This is not a time when I would be champing at the bit to have the old 1x. Certainly not wide enough to make it a credit. You probably have to pay for it at this point if you want a decent one. And again, you're going to pay for it because the skew is kind of weird out there right now. We also have Mr. Unlimited. Oh yeah, he was talking about before. We cautioned him away from buying, I think it was the SEP 2030 vertical. He thanked us yesterday because it was trading for 180, got down to 120 now. He says he still hasn't bought it. He says he's deciding to listen to the show and wait for that bit of an up move first before going on. So there you go. You're like a buck to the good now, Mr. Unlimited. You paid for multiple years of the secret club already there just by avoiding that trade. So well done. But yeah, that's a good bit of advice. I mean, sometimes look what we're just talking about here. Sometimes you're really trying to fit that square peg into a round hole just to make a trade happen, when in reality, it doesn't seem like that's... we're just talking about how much potential juice could come out of this thing in the next few days. I don't think you want to have either the size vertical or the crazy 1x2 right now. Just a challenging time to be putting that stuff on. All right, let's see. Speaking of challenging times, probably one for the crystal ball. So let's get to it.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we reveal just how difficult this vol prediction stuff is. At least everyone else got a chance to play along this week as well, and they all got a chance to learn how difficult it is and indeed to feel our pain. Coming into the end of the show, let's see where we're hanging our hat out here. First, let's go out to Spike's Land. 1581, so it's ticked up about 0.06 since the start of the show. VIX at the start of the show, where was it? About a 15.25. Yeah, it's still pretty much right around there as well. So we haven't seen a lot of evolution in the vol products over the course of the show, despite what our Twitter poll might say, where people think it might tick up a wee bit. Spikes is closer to the 16 handle, but we said VIX, and VIX has a bit of a ways to go for a 16 handle. So it seems like Mr. Jim was actually eerily prescient. He stole the ball from Options Queen, who had about almost 1530. He's at about a 1540. So, you know what? I'm going to give it to him. He's actually 0.11 away. But you know what? I'll be charitable. I'll say he's within our 0.10 bullseye threshold. So congrats to you, Jim, over there. You know, you were talking about how you thought something had to drop, something had to give over the course of this past week. And clearly that was the right way to lean this week. I was a wee bit higher at 17.25, so no love for me there. The Meatball says he's quote-unquote fading his book. I think this is his real heart of hearts here, listeners, at an 18 double, so no joy for him as well. Oh, Options Queen was looking better this week. She faded it as well, 15.95, so you're back in the ballpark there, Options Queen. Congrats to you. You were closer than me. Mr. Unlimited, 17.88, so no joy for him. A bunch of others chiming in. Vixer, that's a new one. I haven't seen that before. 19.06. JJ, 18.35. No love for him. Allen, a bunch of 16 handles in here. 16.67, 16.35, so on. A lot of people had a 16 handle, but no 15 handles. So congrats. Good effort to everyone who played this week. Looks like Options Queen was the closest out there in the listening audience. And of course, looks like none of our broader Twitter audience won, because they were all on the, well, not all. They were tied for second, but the winner, in air quotes, was 16 to 17.5, which at least for right now does not appear to be the case. So let's see. Let's go on out to this week. Mr. Matt, I will spare you the indignity of having to guess unless you really feel like it. So if you do, let me know. But let's go on out. Mr. Meatball, I was closer than you, but only in air quotes. So I'll be charitable. I will allow you to choose what you want this week. Do you want to go first or do you want to go last?
Well, I feel like I should go last since I was so off. So I'll let you go first.
All right. You said you want to go last. And you know what? Matt is brave. He's willing to dive into that void. And since our guest won last week and he is not here, I will give Matt the pride of place of going first. He gets the guest victory. Mr. Matt, sir, what are you feeling for this time next week?
Thanks, Mark. Yeah, I need a shot at redemption because my call last time I was on the show turned out not to be so good. I was bearish on vol, and then the Monday after your show, spiked up to like 24. So
it's a hard game, isn't it?
It is a hard game. I need a shot at redemption. I'm going to call for spikes at 1490. I'm still bearish on vol. I think we're going to break the 15 handle. And we'll see what happens next week. 1490 is my call.
1490. All right. Well, we got something. I think you got some compatriots out here because one of our chat listeners just chimed in and said right before he said that, he said 1492, discovering a new world of sub 15. So 2 of you, at least, Matt, are on the same tip. We got more listeners chiming in now. Luigi's definitely over 22 next week. Too much noise out there about the Delta variant. I'm thinking 2235. That's what makes the market. I love it. There's vol. Look at our poll. In fact, we should probably do a VIX poll again next week. I have a feeling it will be something similar, spread all over the freaking place because there are so many different outlooks on volatility. All right, the meatball is cowering in his corner, so I shall go next. You know, I've been kind of bucking this trend a little bit because I've been seeing what's been lurking in the ether. You know, it seemed like something wanted to manifest to kind of conspire to bring us higher. And in the past, that has usually happened at one point, maybe early in the week. We see a spike, pun intended, then it kind of drifts down towards the latter portion of the week. We haven't seen that spike materialize really in the last couple of weeks. So we've seen pretty much nothing but straight downward trajectory. Can that continue through expiration next week? That's the question. Or will something conspire to have us pop off again? You know, the sane level-headed part of me says that the Columbus level or below might be the way to go. But, dare I do it? Dare I buck the trend yet again? Throw myself into the inferno? Yeah, you know what? I'm going to do it. I'm going to say, not crazy, though. I'm going to say this time next week, we're at about a 15 quarter in VIX and a 1581 in spikes. I'm going to say we're going to be 15 double this time next week. Some vacillation, some erosion coming in to the beginning of the week, heading into expiration, then maybe something conspires to get us back up a little. Not quite to Luigi levels, but I wouldn't be that averse to that either. But still, interesting stuff nonetheless. All right, Mr. Meatball, we've bought you a lot of time. A lot of people have chimed in. Oh, Options Queen coming 16 and a half. A lot of people, a lot of guests coming in fast and furious. If you want to guess, and you're listening live or listening after the fact, send in your prognostications. If you're eerily close, you'll win some cool swag, just like Options Queen did a couple weeks ago. All right, Mr. Meatball, no swag for you, but what's your guess nonetheless, sir?
All right, I'm going to go out on a limb and bet against my book. So I'm going to say 18-18, even though I think it's going to 14.5.
18-18. You like how he does that, listeners? So actually, I put you down for me. I should probably switch that. He says one thing, but he kind of covers his butt so that he can kind of have his cake and eat it too. And I bravely go out there and I stand behind my prognostication. Consequences be damned. All right, there's our market for this week, listeners. We have Matt on the downside, 1490. Me a little bit higher, 15 double, and Meatball once again playing the Russell Rhodes crazy upside roll at 18-18. A bunch of you others chiming in. We'll aggregate all of your prognostications as well and have a nice market for you on the show this time next week. Speaking of the show, that music means we've already gone long, but we're having so much fun here on the show. It's hard to bring it to a conclusion. By the way, if you're listening in the secret handshake club right now, hang out, have fun. We'll pump some fun stuff in the live. We'll be back in a little less than an hour now to break down all the mad world of unusual activity. I don't think, given how the Rock Lobster is battling COVID right now, I don't think he's going to be on with me. But we shall see. Maybe he'll rally and surprise me because he does love talking oddities. So we shall see. But before we go, let's go back around the horn. Matt, if folks are intrigued, they want to learn more about spikes, about shift search, about what you guys are doing on the futures or the options front, where should they go? What should they do?
Yeah, all the information there is for you at MIAXoptions.com. All the information about Spikes Futures, Spikes Options. Check it out at MIAXoptions.com. Thanks.
MIAXoptions.com. You go to /spikes. That gets you to all the fun stuff for Spikes. It gets you the historical data. It gets you the press releases. You can see all this stuff. When all these new things are popping off in Spikes, that's going to be right there. Got a link to the Quick Strike analytics now. Cool to see that. They, of course, Twifo fame here on the network. They power all of our futures options analytics. They're glad to see they're doing some cool stuff now for the MIAX, so stay tuned for that. And, of course, a link to a cool show called Vol Views. What more could you possibly ask for? And, Mr. Meatball, if folks want to come at you, they want to challenge your vol prognostication, or maybe they want to talk about VIX ratios or anything else, where should they go? What should they do?
Well, if you wanted to know about that straddle that was underwater, I wrote it up on Wednesday on my VIX Edge blog. Go to optionpit.com. Click on our newsletters and sign up for the VIX Edge. You'll see the subscribe button right below my handsome face. Click on that, and then it will go directly to your email, and you can read all the wonderful analysis I'm doing on VIX, Spikes, VIX Futures, VIX ETPs, even a little bit of equity now and then, every single day. Far more palatable than listening to me in your ear holes.
You know, the good-looking face, that part's subjective. The rest of it's pretty good, though. So check it out. Optionpit.com is the place to go. On behalf of the greasiest of meatballs and Mr. Matt and everybody over there in MIAX, and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing, and, of course, for listening live. Keep those questions and comments and VIX and Spikes predictions and everything else coming in. Remember, if you're listening live, stay tuned. Maybe to give you a full access to that awesome remastered OPR 100th episode spectacular. All the special guests, you guys get to enjoy that live here. And we'll be back in exactly 53 minutes to break down all the world of weird, unusual options activity. Of course, if you're listening after the fact, we'll see you back here next week, another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.